Well, the Aussie dollar went above 66 US cents when Media Watch was on telly last night, and then after midnight it caused talk and suspicion by going back down again, and then resumed the upward march before breakfast and is currently trading at 66.2 US cents. But it just gets the exchange rate back to the lower end of its mid-year range and not far from where it started 2023. It'll probably keep rising. Well, why is that? Well, for one thing, the iron ore price has gone up 30% in a couple of months against all expectations. And as this graph shows, the market also thinks the gap between Australian and American interest rates is going to widen as US rates are cut and ours stay where they are or even go up again. Also, the exchange rate is below fair value based on relative prices in the US and Australia. Now, these two things occasionally get out of line, but not much and not for long. Today's data morsel was retail sales for October, down 0.2%, but that just reverses some of the big rise in September. Commonwealth Bank produced some updated data today that includes Black Friday last week, comparing it with the 4 previous Black Fridays. And this year's was bigger than both 2019, before the pandemic, and last year. The share market took off like a Bondi tram this morning, but turned into a Pitt Street bus this afternoon. Banks went up, miners went down. Global markets mostly fell, and last but not least, gold hit a 6-month high as the weaker US dollar boosted demand. And that's finance.